Are you here to improve your investment strategies? Are you looking for that one article that could help you finalize that decision you were holding off? Well then, get ready to learn more and gain just that subtle extra knowledge to get an edge in the investment business. Because if you're new here, then you've come to the right place. Welcome to The Daily Fortune, a channel where we talk about all the latest news, updates, guides, and strategies related to investment. Of course, with that said, we're going to be discussing a lot about the Oracle of Omaha, Warren Buffett, The Big Short, Michael Burry, the money tree Cathie Woods, Tesla's very own CEO and eccentric billionaire Elon Musk, along with the rest of the big leagues to learn just a bit more from the professionals. And don't worry, of course we talk about crypto, and we also talk about the best stocks to invest in, along with many tips and tricks on how to handle your finances so you never lose. So before we talk about making money, remember to hit that like button, subscribe, and ring that notification bell as well to make sure you won't miss a single video. Now let's get started.
We now see a quadrupling over the next 5 years. That is more than a quadrupling. That's more than a quintupling.
We've all had a challenging year last 2021. And yes, the investor Cathie Wood has had a difficult year as well. But now she strongly believes that Ark Invest will earn an average annual return of 35 to 40% over the next 5 years. That's a bold assumption though. But Cathie's confidence is backed up by a slew of variables that are all aligning to give her the best opportunity she's ever had. In this video, we'll talk about some of the individual investments that have the potential to generate 8 to 25 times returns in the next 5 years. So let's get into it. There are a variety of reasons to assume the market will collapse. It could be the new COVID variant that is spreading across all of the globe, or the real estate bubble in China that's bursting, or the possibility of interest rates rising. And quantitative easing will most likely end soon. Even though some of these fears are valid for the general stock market, Cathie believes that Ark Invest related stocks are set to go on their biggest bull run ever. Over the last year, the short-term difference between Ark, the Ark Innovation ETF, and the S&P 500 has begun to widen. The reason for this is related to the concerns I raised earlier. Inflation is the most prominent economic concern on the list. In particular, the effect of inflation on interest rates and quantitative easing. Wherein the Federal Reserve buys bonds, growth equities suffer the most from high inflation because investors prefer current gains over future profits. Fed Chairman Jerome Powell recently stated that inflation is no longer temporary, implying that interest rates may rise more quickly than expected. Powell's inflation warning should have caused bond yields to rise in response to the new inflation predictions. This is due to the fact that as inflation rises, inflation-adjusted returns, also known as real returns, fall. As a result, bond rates must rise to maintain the same level of real returns. In other words, if inflation expectations rise, the bond yield should rise as well. The bond market, on the other hand, went in the opposite way. This market reaction, according to Cathie Wood, is an indication that a big consumer price fall is on the way. Inflation has lasted longer than Cathie anticipated, and inflation expectations are already rising. A shortage of supply is driving up consumer prices, but this will not stay permanently. Cathie predicts that once supply chains become overstocked with inventories, consumer prices will plummet dramatically. The bond market's opposite reaction signaled an approaching price crash.
Well, I do think on the inflation is transitory side that Chairman Powell, sort of changing his mind on that, rang a bell. And it was very interesting to watch the market's response. Long-term interest rates fell and the yield curve flattened out pretty dramatically, which is not what one would have expected if he's right that inflation is taking off. So I think the markets are talking to us. It is a very confusing time because the markets, there are a lot of conflicting signals in the marketplace. And I do know, of course, that inflation has run way above what the Fed expected, what we expected, because we never expected supply chain issues to extend this far into this year, and certainly never expected another round of hoarding to take place around fears that people would not be able to get their holiday gifts. So I think there's been a supply chain scramble. We've been waiting for it to unwind. And I have a feeling what the bond market is telling us is that on the other side of this are going to be shocking surprises on the downside when it comes to pricing. We think the other side of this is going to be just as surprising as the pricing on the way up.
China is yet another factor influencing inflation. How? The Chinese economy is slowing as real estate developers fail on their debt payments, causing the economy to decelerate. The Chinese real estate crisis was aided by the government's enhanced regulation. When the Chinese economy collapses, commodities collapse as well, resulting in significant deflation. Even if interest rates rise, Cathie predicts that consumer prices would plummet to the point that the Federal Reserve will have to reconsider its policy.
So if we're right and interest rates start going up, I believe prices will come down very quickly and that the Fed will stop raising interest rates or rethink it.
Now you may be wondering how this will affect Ark Invest and the stock market in general. High inflation caused the Ark Invest ETF to crash in 2021. But if what we said is accurate, Ark Invest is to undergo one of the largest bull runs ever in history. Cathie had only expected 15% yearly returns in February 2021, but now she expects 35 to 40% annual returns. This is because as long as future price goals stay constant, lower valuations translate to higher expected future returns. Let's say Cathie Wood predicts Teladoc will hit $500 per share in 2026. Investors should expect a 5 times return instead of a 2 times return if Teladoc drops from $250 to $100 and the $500 price target remains the same. This connection is comparable to how bond prices fall when bond rates rise. If the fundamentals remain the same, decreasing stock values will only improve future returns.
In mid-February, the height of our strategy, our style being in favor, given our assumptions about valuation, we believed that investors would enjoy a 15% compound annual rate of return from our strategies, which is much better than the stock market over time, which is in the 7 to 8% range. But it is our minimum hurdle rate of return. So frankly, we were getting a little uncomfortable and we were taking a lot of profits. Now, after this sell-off all year based on inflation fears, especially, and fears of interest rates going up, therefore, if we are correct in our estimates, top down, bottom up, and we may not be, but we've had a pretty good track record in terms of understanding the dynamics associated with exponential growth trajectories in innovation platforms. And so if we are correct, that number today is closing in on 40% compound annual rate of return. It's somewhere in the 35 to 40% range, depending on the portfolios. That is more than a quadrupling in our portfolios, again, if we're right, over time.
Cathie Wood believes Ark ETF will increase by more than 4 times in 5 years. Those who have been monitoring Cathie's portfolio will see that she has been selling during the pandemic. Stay-at-home stocks are providing a once-in-a-lifetime opportunity to create enormous returns.
Tesla has had a 2-year streak, unlike any of the other stocks in our portfolio. At the same time that many stocks that are categorized by algorithms, and believe me, I see mindless algorithms in this market all day long, especially these days. They are down for the year, down significantly for the year. And as you know, we've been buying the Teladocs and the Zooms and others that are just considered stay-at-home because we think they're completely misunderstood. Just like they were misunderstood, many of our stocks were misunderstood during the coronavirus. Algorithms had 2 things on their mind during the coronavirus, the early days especially. Does this company have a good cash position? And is this company not burning cash? And those 2 variables they put together, and they slaughtered a lot of our stocks in the early days, giving us a tremendous opportunity to pick these stocks up for a third of where they sold prior to the coronavirus crisis. We're seeing the same opportunity, stocks that are a third where they were at the peak when they were considered stay-at-home stocks.
A significant amount of Tesla stock. There are a lot of investors who feel that her sell-off indicates that she has lost faith in Tesla, but this is simply not the case. Cathie is selling her Tesla stock because she believes there are better opportunities for larger returns everywhere. Stay-at-home stocks are one of the most excellent opportunities of them all. Because the world is beginning to recover from the pandemic, maybe you may feel perplexed or doubtful. Stay-at-home stocks that take advantage of the real opening trade have been sold by algorithmic traders, the same way that travel stock was hammered down. If the fundamentals stay unchanged, falling prices turn into strong expected returns. As I mentioned previously, during the pandemic, algo traders first punished innovative stocks. Cathie has been taking advantage of her algorithmic inefficiencies by selling equities like Tesla, which she uses to buy stay-at-home stocks. She believes that the fundamentals of stay-at-home stocks have largely remained unchanged, and that the future returns will be significantly higher. Teladoc is one stay-at-home investment that Cathie Wood believes is undervalued by a significant amount. Teladoc is the leading telehealth provider in the United States, with its main offer being able to interact with doctors and patients via the internet. In October 2020, the company purchased Livongo for $18.5 billion. Livongo is a firm that allows consumers to communicate with their doctors remotely about chronic diseases like diabetes. Regardless of the fact Teladoc paid $18.5 billion for Livongo, Teladoc is only worth $15 billion at the time. Think about buying a firm for a price that's higher than the value of your own 1 year later. This disparity demonstrates Teladoc's downfall. Cathie Wood predicts that Teladoc will now revert to an average compound annual rate of return of 50% per year over the next 5 years when the company decreases from $300 per share to approximately $90 per share. If Cathie is correct, that's almost an 8 times return in 5 years. This is due to Teladoc's proprietary data, which Cathie discusses in this short clip.
The chief technology officer and data scientist at Teladoc right now has united the AI expertise of both Livongo, which they bought, again, focused more on chronic diseases, diabetes, mental health, and the data scientists at Teladoc, which was much more focused on the acute space and physicians. He's originally from Memorial Sloan Kettering. He is doing a phenomenal job at creating a data platform here, the likes of which no one will have in the healthcare space. In the case of Teladoc, I believe that our compound annual rate of return expectation for the next 5 years is north of 50%. So if we're right on this idea that Teladoc is becoming the healthcare certainly healthcare information backbone, but healthcare backbone of the United States, this is a very big idea.
Cathie's second largest holding in Ark Invest right now is Teladoc, but she does have more speculative room in her portfolio. The stocks I'm referring to are CRISPR Therapeutics and Intellia Therapeutics, two firms working on genome editing. CRISPR Therapeutics has developed a technology that can disrupt, delete, and fix DNA, allowing it to cure a variety of ailments, while Intellia employs technology to modify genes in vivo, which is a fancy way of saying in a living organism, for blood diseases. Intellia, CRISPR, Teladoc, and a few more have combined market capitalization of around $40 billion. Cathie believes the number will rise to $1 trillion, representing a 25 times return. That's huge. Some people think Cathie Wood is the bubble's foster child, although Cathie clearly doesn't believe that. If Ark is in a bubble, the 30 to 40% annual return won't be correct, but based on the study that Ark has conducted, she expects that the disruption will be substantial over the next 5 years. On the opposite, she believes that only index funds such as the S&P 500 are experiencing a bubble.
A lot of people do think we're in a bubble, and that your stocks are in a bubble that we're just starting to see the air come out of.
Yeah, if then our 35 to 40% compound annual rate of return will not happen, which means our research will have failed. I just don't believe that.
You don't seem stressed right now, for what it's worth.
No, the bubble, if you ask me, is in the benchmark stocks. The shift towards benchmark stocks, a little bit of a self-fulfilling prophecy once again. I think that will end once all the disruption and chaos that we see descending on the traditional world order becomes apparent when these companies start reporting earnings. And maybe it won't be for the next year or two, but I have a feeling it's going to be much sooner than that.
Cathie Wood has been experimenting with a new investment approach in which the shorts disrupted traditional benchmark stocks. This method has been called Ark on steroids, and it will be made public if internal tests are effective. In essence, their tactic will short traditional automakers, merchants, and other companies that are about to be disrupted. So there you have it, Cathie Wood's predictions about Ark Invest. Thank you for watching. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, don't forget to hit the notification bell. See you next time.